Hey guys, it's Saturday, February the 18th, and this is our Friday recap for the week ending February 17th. So let's get right to it and see how the market's fared up for the week. First up is the S&P. Guys, I was wrong. I'll write about this in Monday's blog, but I said that the last time I'd seen a market like this was in 1999. This is one of the strongest moves I have ever been a part of, but I was dead wrong. The last time that we've seen a market like this, according to our friends at Sentiment Trader, was 1926. Get that, 1926. Guys, the aberrational moves are historic and epic, and it has not stopped. It hasn't let up. Every time this market has moved in the last 3 years, it has set all kinds of precedents. It's going to go a lot higher from here. We just need a pullback first. I mean, geez, 5% pullback would be nothing. I mean, we're up 350, 400 points since November in a move I've never seen before in the S&Ps, let alone the NASDAQ. NASDAQ's just screaming higher. But look at where we stopped in the S&Ps up here, guys. Let me find my cursor. Yeah, we hit that first level and it held it. We've also got some resistance up here. These are some extensions that I've been plotting from some of these levels right here, you'll see. So they're clustered up there. Hey, I don't know what would stop this market. I mean, I wrote about it the other day that North Korea launched an ICBM. The market went to new highs. Last year, when North Korea launched a missile, we lost 30 handles, over 300 points in the Dow in a matter of less than an hour. I mean, it was just huge. So the difference right now between this market and last year's is just unbelievable. I really think, guys, we're on the cusp of what we've been talking about for over 3 years now, and that's that stratospheric move up where we got to change our tactics, and where every day you come in, this market's going to scream higher. So we get a pullback, and we just need to get long and don't look back until I say so. Hey, listen, this thing last week there were more calls from different media's outlets about this strength of this rally, about how good it is, about how it's going on forever. You know, typically, guys, if I wasn't already short this stock market, I would probably lay out everything I have betting on a down move. I've seen this too many times when these markets get to these levels and everybody comes out and says nothing but they're in agreement with how the market's moving. So they call for it to go a lot higher. It's different this time. It's moving. Hey, that's the time to really watch out. I'm short the market. I mean, geez, guys, I'm short from this level right here. So I just keep selling puts. Now I've raised my cost basis, but it's just a phenomenal move, historic, epic. If you're short this thing like I am, and you're still in the game, hey, my hat's off to you, because, like I said, we haven't seen a move like this since 26. All right, let's take a look at the bonds. Hey, guys, check the bonds out. I just want you to understand, we made the low back here, higher low, higher low. We're at all-time, lifetime highs in the stock market. The bond market's trying to grab some footing right here. I'm long bonds via an at-the-money put credit, sold at-the-money put credit spread. So, not a big trade or anything, but we're up, we're profitable. And last week, bonds stayed within the range, come down, pegged our first level, and then moved back up again. So, bond market looks like it's trying to grab some traction. Even with the stock market just screaming higher every day. All right, here's crude. So crude was very docile again this past week. It just won't go down, and it won't go up. Hedgers are short this market to the extent they've never been short before. They added more to their short position last week, according to the Commitment of Traders report, the COT. So they're incredibly short this market at a record level, and this thing just won't budge. I don't know what those guys see. They're the insiders. They know what's going on, and they've been short this thing for as long as I have, or longer. We've been short back in here selling put credit or call credit just selling calls at the 56, 57 level, and it's been working out for us because crude hasn't gone anywhere. But geez, man, the first time this thing goes down, and we get the max profit in those calls in a matter of hours, if not days. So crude's just laying there. I don't know. I don't know when she's going to budge. I'll just keep doing the same thing until it moves one way or the other. All right, the dollar, good boy this week. Stayed in between the goalposts. So really nothing to mention about the dollar right here. Just to compare it with gold, which we're looking at next. You see. You would think we made the low in the gold back here. I'm still kicking myself, guys. That was the trade of the year for me, and I took it off way too soon. I was long gold, short the dollar right here. I mean right here. We went up. I said I'd take it off at 1160. We went right up to 1160. I took it off. I missed another, oh my gosh, another $100 run up in gold market. Oh my gosh. Well, anyway, it was a good call, good trade. I just came out way too early, and the dollar collapsed as well. In face of a just incredibly strong dollar, everybody was calling for it, the dollar to go to 106, 107. We were at 103. It's just ridiculous. It's like I say, every time a market makes a new high or a new low, everybody comes out and are touting this thing, whatever market it is, it's going to keep going that way. So when you get enough of those lunatics doing that right there, they're just blowing hot air, guys. That's all they're doing. I hope that's what they're doing on the stock market because, like I said, I'm short. Anyway, that's the wrap for this week. That's how we fared for our levels. And this is BA, hoping that you guys have a really nice trading week next week. BA signing off.